Right. What's a real estate guy doing in blockchain? Good question. My studies, I started my first company where we rented out serviced apartments. And ever since that, I've been following any new traction in technology. And quite early on, I discovered Bitcoin. At some point, I just decided to bring those two worlds I know best, so real estate and blockchain, together. So what the hell is blockimmo? Blockimmo is a platform for real estate investments, and we have a vision where we think that anybody should be able to trade a piece of real estate just as easy as you can trade a piece of a company, a share. And this means two things. One, it's easy accessible. Two, you can sell it at any point in time. So why is it different compared to traditional real estate investing? There are lots of reasons there. Traditional real estate in general is a very slow moving market. It's dominated by a select few for obvious reasons. There are really high capital requirements to get in. And also you need to be well connected. You have to have access to the source of the property. And there are certain important middlemen involved in any transaction. There are some variations, for example, REITs or investment funds, where they give the investor the feeling that he has a more direct connection with the real estate. But in the end, your money goes into a big pool, and you don't know really where you're investing. And in all of the variants there are out in the open, you have to have quite a lot of money. If you look at traditional crowdfunding real estate, even there, the ticket sizes, so the share of a property is quite high. Depends a little bit on the jurisdiction you're in. Usually you won't find anything below 100 or 50k pounds or euros or Swiss francs. And that's completely different when you use our platform, so blockimmo. We tokenize real estate and we use blockchain technology, and therefore the entry is almost as low as €1 or £1. That doesn't make sense. So we usually say it makes sense to invest starting from £1,000, euros or Swiss francs, but we make it far more accessible that way. So that's probably one of the key differences. The other element is that if you invest in traditional real estate, your investment is highly illiquid. What does that mean? The moment you invest, your money is locked. Usually 5 years, 10 years. If your financial situation changes, it's really hard to get out. If you can get out, there's usually quite a big discount. And this is also different, again, using blockimmo real estate tokenization. You own tokens. These can be traded on the secondary market 24/7. So that sums up, in short, the difference between blockimmo and traditional real estate investment. So how is the value of the property reflected in its own token, its security token? In the primary market, so the crowd sale, when we first issue the token, there's obviously part of the due diligence is the valuation of the building, which will be done by 1, 2, or maybe even 3 well-known valuation companies. And let's assume the property is valued at 5 million. In the blockimmo solution, we always create 1 million tokens. And based on the valuation of the property, in this example 5 million, 1 token will be 5 Swiss francs. That would be for the primary market. Then the value for the secondary market, once this security token is listed at a regulated security token exchange, people can start trading them freely 24/7. And the value there is determined by demand and offer. And so it's not that we tell people what they should do. It's basically market trading, right? So obviously the building is there, the valuation is there. Your token value initially was 5 Swiss francs. Maybe 2 years down the road, the property value increased to 5.5 million, reflecting in the token it would be 5 francs 50. And then at some point you decide to sell your tokens. You're obviously going to check what's the valuation of the building, and then you're going to put in your sale order. And then a buyer is probably doing the same thing and might agree on buying this sale offer of you. Of course, there are situations where you might be in need of liquidity and you're willing to sell it slightly below the property value, just to make it more attractive for a buyer to buy it. Does that make sense?